Ladies and gentlemen, welcome to the SoFi Weekly, which should have been the Chess Weekly because Tevis made us very late due to his, chess.com ladder climbing?
Roy, you're the arbiter here. All right, you got to keep us
Why don't
on.
you defend yourself instead of bringing Roy into this?
I
Do you
think
want to lie to everyone here?
I think the entire chat knows which one of us three was the one that was late. Yeah, starting the stream. So
Yes, exactly. Hold on.
Why can't you definitively say that your chess did not make us late, Tevis? Why do you have to divert to Roy?
Bro, I'm not late because I always start my streams and then I go off camera to get my drinks and stuff, and I let Roy awkwardly say hi to everybody.
But we're 3 minutes late. You just got your drink. Why is that?
Because it's you. You're the one controlling when the stream starts.
Do you guys see where the cracks in his story is? All right, we'll leave it there. Ladies and gentlemen, we have some deal making going on at SoFi. Okay. $5 billion already disclosed deals that we've already talked about. Roy, what did you think about the finalization of this Blue Owl Capital deal?
yeah, I mean, it's not surprising, just because. No, it's really not. It's great. It's a confirmation of what we already expected because we've seen in quarter four earnings was great. It was a great depictor of this in the month before as well. That there's a lot of interest and a lot of appetite for exactly this kind of product. SoFi obviously offers something. I mean, it's like Upstart in some ways. I think it's better than Upstart, frankly. But it's an incredible product, timed very nicely as far as when they entered the market, growing very rapidly with zero downside risk for SoFi. Like, it's amazing. So this is a confirmation of what I expected that we would see, is a lot more of these type of extensions and deals. Probably Fortress is maybe next, since I think that was a 1-year commitment. So exciting, awesome, expected, but that doesn't mean unappreciated.
That's a good point. Tevis, initial thoughts whenever you saw it the second time?
Bro, I'll be honest with you. I didn't even read the press release. I posted the news and I'm reading the press release right now, partially because I was busy, but also partially because we already got, this news ahead of time, like months ago. Very cool that they have a press release and that they're doing this type of business. Really amazing to see the loan platform business originating billions and billions of dollars. Yeah, I don't know what more to add. I think everybody watching sort of knows the deal with the loan platform business and the impact that it's going to have on SoFi's success. So good news all around. We had hoped that, I mean, if they had dropped the news and finalized the deal, February 15th, that would have been great. But, March 15th is fine too. Just caught the market at a bad time, I guess.
But isn't that kind of interesting though? If the macro is turning and potentially this is a bad time to buy personal loans, why would Blue Owl Capital finalize that deal?
Because it's not a bad time. I mean, like, we basically go from when the market was roaring, everything was going up really quickly. At that point, for most tickers, PayPal may be the exception, but for most tickers and most of the market, any bad news was completely being ignored. Any potential downside just completely being ignored, and the markets are irrational. They just are. They exaggerate, and so really over the last couple of weeks, the opposite has happened. I think that we were overdue, frankly, for a correction. It's not fun going through it, but they happen in bull markets. And I think we had a nice bounce off of the RSI today. I know, you can never like time exactly when the bottom is, but you can see when it's probably closer than further away. This is, by the way, a local bottom. Doesn't mean we can't go down further. But with a lot of what's happening, we can see rate cut probabilities have really increased, especially through the end of the year, which is very meaningful for lenders like SoFi and also for those that have an appetite for loans that maybe SoFi wouldn't issue themselves, but they have no risk to do this for others, and so they go ahead. They're authorized.
Yeah, I mean, SoFi takes no extra risk if these loans end up defaulting. Now, we still don't want to pick out loans that could possibly default. We won't get many recurring customers doing that. But still, there is a large benefit for us on the upfront, and hopefully that goes back into buying more customers. Did we end up talking? Go ahead, Tevis.
I mean, look, I think, for this Blue Owl deal, it was close enough to being finalized that management felt confident enough to mention it on their earnings call. And that earnings call was before this whole tariff situation. I wonder, though, it wasn't going to affect the Blue Owl deal unless something drastically changed, which would be very unlikely because, again, they were like at the finish line for management to even bring it up on the earning. They probably had like a verbal agreement, like it was probably across the finish line even. But I think the point is a fair one to say, well, now that the uncertainty is introduced from a macro perspective, does that change the environment for more deals of this nature?
So this kind of shows, this is, by the way, December's. So looking at the end of the year, December 10th. And we can just see the direction that this has really shifted from like a month ago. A month ago, people were saying, hey, maybe one rate cut, maybe two. Some people, 15%, were saying none. Now, 2.5% of people, it's up from yesterday. It's amazing how much this can change in a day, are like, yeah, no rate cut. But most people are saying, well, two, maybe three. And a few people are saying four, possibly. And, this can move around quite a bit, but I think we're a lot closer to probably three rate cuts, which is what I expect that they'll do this year. But we'll have to see. Time will tell. Powell came out, kind of, just neutral, I would say. Not really hawkish or dovish. But, yeah, a lot of the indicators are pointing at maybe the Fed is being a little obdurate and that they need to kind of shift off of the let's be data dependent and wait until the entire job market collapses and everybody is living, trying to survive the zombie apocalypse, but it's not quite that bad. But there's a lot of softening that's indicating that there's going to be probably more rate cuts than perhaps what Jerome Powell and the Federal Reserve had anticipated. And not all of it's bad news. Some of it is. Actually, a lot of it is. But, for the market overall, I think we've moved beyond, which, we were here like 2 years ago, that the entire market, like the whole thesis was about rate cuts. That's not where we're at now. It's still meaningful, especially for a company like SoFi, which benefits immensely from rate cuts.
Yeah, it's weird, right? Like, I guess we have to kind of balance out, if there is potentially a weaker consumer, but does that really affect SoFi if they're on the upper bound, portion of that or higher FICOs? Yet the rate cuts affect us equally. To even the Affirms of the world or something like that. Maybe a little bit less than them because they kind of start opening up loans that they previously couldn't sign, which I think would have a better benefit than even better pricing. But the reason I bring this up is because if there is this sort of more rate cuts than anticipated, but maybe a weaker consumer than anticipated for SoFi, they anticipated 1.5 rate cuts for the year. Is that a positive for SoFi going forward, that we actually see more of a net benefit from the macro than negatives?
It just depends how weak. So if we're talking recession, SoFi is technically untested as far as like a business of this type through recession. But honestly, like we saw Anthony Noto and his team have their entire business basically taken away during COVID. And yet here they are today, profitable. They've grown immensely. They've iterated. They'll be fine. Like we see the way they guide and how cautious they are. They're building this for a long term, not necessarily just for a 1 year pump or push. But if we have an environment where perhaps the consumer is just a little bit weaker, just that kind of helps inflation, which is a good thing. It allows for more rate cuts as well, both from the jobs market standpoint and also from inflation slackening a little bit, at least disinflation, maybe even a little bit of deflation wouldn't be the worst thing in the world. Those are nice things for SoFi, especially because there will be an appetite and really a need, frankly, at that point for people to refinance some of their debt at lower rates or over the longer term. Debt is not a fun thing. It should be avoided most of the time for most people. I mean, there's times, home mortgage and stuff where it makes sense. But I mean, that's the reality of where we're at is the lower end consumer has a lot of debt, maybe perhaps student loans, mortgages, those sort of things that they'd really, really benefit from having rate cuts along with the opportunity to refinance some of that.
Yeah, so that's one thing. And the second thing to consider is like their demographic is higher FICO, high earners, which generally speaking, regardless of what happens, will have more of a cushion than everybody else, where they can make up for it with their high salaries, or they just have higher net worths in general, and they have more maneuverability from that perspective than somebody who is more like has less of a margin of safety. So I'm not really worried.
I want to go back to the Blue Owl Capital deal really quickly because I did some numbers on one of my videos and curious what you guys think. SoFi services the loans on top of taking an initial cut. I placed that 2.25 based on their previous numbers that they've seen in the last 2 quarters. And by last 2, I mean the only 2 quarters of data that we have. Is it fair to think that we could be bringing in $232.5 million over the next 2 years from this single deal?
It'll probably be a little under that. I would guess if there's some sort of volume discount. I could be wrong.
Yeah, favorable pricing.
But I mean, like we're looking north of 200 million, which is pretty amazing. No risk.
Yeah, considering the fact that we've gone under 2.24, or sorry, that we've done under 2.25 at 2.24, we'll probably be leaning closer to that side than the midpoint of these two. But even during these 2 years, like there's still bleed-ins from the Fortress deals, from other smaller customers that they've seen use the loan platform business that they do not disclose. What do you guys think for total originations over the next, let's say 2025 or, next 12 months? Have you guys thought about this at all? No?
Nope.
No.
I'll bring up a tweet from the great and powerful Data-Driven Investing, where he was crunching some numbers on what he thinks could be different amounts of annual originations for SoFi at this point. So right now, their annualized origination rate for the loan platform business is now 6.9 billion. So he even highlighted the 4.25, putting it somewhere in the midpoint, and then offering some other targets and how much money this might actually bring on. Very interesting. Very, very interesting. See, because it's a much higher number, says annual revenue, you have to remember that the Blue Owl Capital deal was spread out over 2 years. So it wasn't going to bring in $200+ million in that single year. It's going to bring in about half, right? Spread out over 2 years. And from my understanding from the Fortress deal as well, is that it's almost spread out like perfectly evenly. Like it will be about 625 million per quarter, which will be, quite interesting.
Yeah, it's a meaningful source of revenue. And, I saw a comment asking this, what the risk is for SoFi. So the loan platform business is very differentiated from the loans that SoFi originates and holds on their balance sheet. There is a risk of default, and there is also capital constraint. Now, they're not anywhere close to being capital constrained, but the loan platform business, all they're doing is originating, and then they don't hold that on their balance sheet. They kick it over to whoever their partner is, in this case, Blue Owl that we're talking about today. So Blue Owl owns all of the risk, and their capital is what is being looked at as far as being capital constrained. Now, they have a lot of capital, so they're fine.
Yeah.
So there's really no downside, no meaningful downside at all to SoFi. Like the worst that can happen is, let's say something crazy happens. A lot of people start defaulting on those loans. Maybe Blue Owl say, hey, slow your roll. We're not liking where these things are lining up, and they'll still have authorized that amount, but SoFi will just have to slow down the originations. But there's no risk of default. There's no capital constraints. It's an amazing entry into the market that's performing very well, that's accelerating meaningfully. to the extent that this is, frankly, one of the most exciting things about SoFi this year.
You think there's going to be news coming out over the next couple of quarters or so around them packaging up all of this, Blue Owl deal from a securitization perspective?
I think they're going to do that on their own.
Yeah, like, you think that news is also going to... You think Blue Owl is going to do that?
Yeah. I think they have such a big business themselves, they don't need SoFi here. They're much larger. So, like, this is not even the only one that they did. They kind of swept the whole market. They went over to Upstart. They bought $2 billion from them. They went to, I think it's Newegg. Is that what it's called? Not Newegg. That's the computer company. What is it? It's that lending company. I'll find it. Anyway, they bought about, like, I think $1 billion from them. So they went to a couple different players and bought a bunch of loan platform or like originated loans based on their underwriting capabilities. Best Egg, thank you, Best Egg. So yeah. Okay. Any other news this week that you guys found really interesting from SoFi?
Did we talk about Cryptic Noto and his replies? I think that's been this week.
One. That's a fun one. Yeah, if you have it, bring it up. If not, I can pull that up.
Sure. Here it is. So, March 8th, it's a whole new day. Do you know what was on March 8th?
March 7th.
Well, this says 8th.
No, but March 7th was what you're going to say.
Yeah. So it was a day after the crypto summit. So, and then Fresh Horses We Ride. Now this one, Tevis, I think it was you, Tevis, that, you kind of went through and looked at all the different times. Like, this is a common Noto saying, but this is a little bit different than Noto's usual style. Now, he does the fires and the rockets and stuff. He's a sports guy and a SoFi guy. So, but
he often says "Fresh Horses We Ride."
He's said it like 4 or 5 times in different tweets throughout the years.
Is it like every time that he does a new product launch? Like, did you line it up to other events?
No, there was one post on LinkedIn from when they went public, and he had said that. And then there was a post in 2022, I think, and then again in 2023. You can just Google "Fresh Horses We Ride" Anthony Noto and you'll find all the posts. But yeah, it's a Anthony Notoism.
Cool. People are in the chat are saying he signed emails with it. He used to sign emails with it. Interesting.
Oh, I didn't show you the other tweet too.
There's a third?
Yes.
Uh-oh.
It's me. Fresh Horses We Ride, I suppose. I'm like, if Noto's doing it, why not? So, what do you guys think it means? Both of these
weird thing, dude. Like, it's such a weird, like, strange saying. Like, what does that mean? Like, your horse is tired, so you hop on a new horse. Like, I don't get it. Anyways,
so yeah, I do have a couple of them from Noto here that I'll throw up just to kind of show you some context. Advanced search actually kind of works on X sometimes. So going forward, SoFi is proud. Blah blah blah. If you want to join this journey, Fresh Horses We Ride. Congrats, ladies. Heck of a second half. Fresh Horses We Ride. That's not Anthony Noto. There's one more somewhere. But anyway.
A dangerous game of you just blind scrolling on.
Yeah.
Yeah, I'm like, I'm going to stop.
Next thing you know, none of us have YouTube channels.
Yeah.
Yeah, Fresh Horses We Ride. I don't know. Maybe it's just a saying, he grew up with or something. I don't know. But I do think that the crypto one is the one that I definitely paid attention to and thought was a lot of fun.
Yeah. Do you think that tweet that he had made, the initial one, was specific to crypto?
I do. Yeah.
Yeah, I think so too. So I still think that there's a number of hurdles that they need to clear. You're going to be wrong about quarter one, but I'll probably be wrong about quarter four.
It's
Maybe
not
we'll
over.
be meeting in the middle. It's close to over. I mean,
Wait, when is quarter one over?
End of March.
31st of March. So he's got half a month left. 2 weeks. There's almost no way.
Yeah, there's 4 quarters in the year, and it's actually spread out amongst the 3 months of each.
But so I do think that there's a
and if you see a
possibility.
groundhog, then one of the quarters gets 8 weeks longer. But
I think that there's a possibility that they'll launch a product that is not fully the SoFi Invest crypto that we knew previously. Just basically something that allows you to store crypto there directly, not to actually use, not to buy, not to sell. Honestly, I think that would be kind of a mistake, even though it's like, hey, technically it exists, but you can't do anything with it. It's not meaningful. But I think that that's what we could see. We realistically see if they're eager to launch something in quarter one until red tape actually clears up.
I really want to talk about a little piece of news because it's a little conspiratorial and I think it fits well, but it's for a different stock.
PayPal?
No, that's funny. But just really quick, I have to get this off my chest because I want to hear what Roy's thoughts are here. What's going on? What is this? Did you see this?
This isn't. No, I don't think
this is Robinhood.
It's a Robinhood thing.
Oh yeah,
they released this, and my brain went wild. One, it looks like an investment pie from M1 Finance. Like you could see the diversification in this ring. Okay, like you have 5% this. This is your biggest product anyway. So I think that they're going to come out with multiple accounts. I think that this is interesting. But Roy, why choose this color scheme? Why is it not gold?
So you're going to have to help me.
It's platinum. It literally, I put up the color platinum on my video. It is platinum.
Okay. I'll take your word for it. Yeah, I mean, I'm not fully colorblind, but I'm enough. I'm like, black, like white, purple, maybe.
It's not gold. I think in the Lost City of Gold.
Yeah. No.
Which, by the way, did you see where the venue is?
So platinum's like a silver type color.
Yeah, it's like this type color.
That doesn't help me, but okay.
I think you're looking at it.
Yeah, you're staring right at it.
It's like telling a blind man, like, "Oh yeah, it's like this." Like, okay, nice, yeah, cool.
But did you see where the venue is? By the way, you can't say it out loud. I don't think.
Probably not. No.
But very cool.
Yeah, it is. And I like the little, like the 2% match. It's cool. They've done matches before. I like that. I actually really like the gold, flakes, the gold bar as well that they are giving out to people that transfer in. I think that's fun. So
yeah,
there you go. Yep.
And people are also saying, why is it flipping like that? Like, does it look like a coin? Do you think that could also be some sort of stable coin reference?
I think that maybe we're reading a little bit too much into it. They do quite a bit of symbolism stuff, but the Miami Summit, like if you remember, there's like this weird praying mantis on a ball, like that had nothing to do with, as far as I know. Like maybe it's something else. But I was like, what in the world are they going for here? And it was like a cool picture. So I'll have to ask, one of those guys. Like
you could be right, but I would put all my fresh horses on the fact that they're going to have multiple investment portfolios. That one I
think that's actually good call. And it's something that frankly they needed. So
do they have managed portfolios / private equity? Because I remember when one of the more modern brokers here in Canada launched like private equity, that was like the color scheme. It was like this exclusive black platinum-ish color scheme for them, like professional wealth advisors or whatever, granting you access to private equity deals. Do you know what I'm talking about, Tanner?
This is for Hood?
No, Well Simple in Canada had it.
So Vlad's talked about being able to use, and I don't fully understand it, but being able to use the blockchain to get in some of those seed fund rounds of private companies. And yeah, there's a mantis.
I don't know what it is.
And they do have managed, like they acquired Trade PMR, so they do have that. That's newly integrated into the Robinhood ecosystem. We'll have to see where that scales in the future. But no, they don't have what you're asking about yet.
I feel like that could be a really cool offering, and I could totally see them going in that direction where they say, "Hey, you want access to Stripe and SpaceX and whatever, Canva and Patreon or whatever, and great, here, invest through Robinhood if you have a certain amount."
Yeah. Yeah, because in the careers page they talk about like platinum is not something that they're even, well, maybe they're trying to hide it, but it's pretty well known that they're coming out with this next sort of tier. Just whether or not they're going to charge for it, I think that's the thing. I'm in agreement with you. I think it's going to be about assets under management, or because they've talked about like democratizing it so much. So I don't really feel like they're going to be putting private doors down. That I think that it's going to be about the amount that you trade. I think it's going to be based on some sort of activity. Because it was in the wording of the thing, it talks about helping our most active customers, not our richest customers or high net worth customers.
And that would also be a little bit antithetical to where they've been in the past as far as democratizing finance and creating a level playing field for those that don't have a lot. I mean, that's kind of what Robinhood is founded on. So not that you can't, offer that and it goes against your mission, but it just makes a little more sense the way you describe it, Tanner, I think.
Yeah, they are definitely doing some sort of multiple tier. It's just whether or not it's going to be, I don't know, $50 a month or something. I don't know.
Maybe we can include Robinhood in this, and I think Coinbase and SoFi. So I don't think that we'll have a recession, but if we do, like SoFi hasn't really been tested as a business. Robinhood has kind of, but they were in their infancy, and they did not have nearly the product offering as they have now with Robinhood Gold, especially. I'm just kind of curious with that and with Coinbase One, their subscription platforms, as well as SoFi Plus. Like, how do you think if we do have a recession, and this is like a real recession, not a Biden recession where it's just the job market's fine, but there's 2 consecutive quarters of negative GDP growth. So an actual difficult recession, where would you rank these companies as far as which one would be most impacted in terms of company and then also stock price?
In a recession?
In a recession.
Coinbase all the way at the bottom. So both far past names that you didn't even name.
Yeah, both stock and company?
Well, I think that Brian Armstrong is great. So they would tighten, like there would be a lot of layoffs during that time, and they would not, their expenses would adjust to the market.
I mean, their stock took a really big hit down in 2022, right? Like it fell. I remember it fell in the 70s, but I think it fell even lower than that. Like
I think it was like in the 30s.
Yeah, it literally fell in the 30s in 2022. So, I mean, it hit 350 earlier in November. So that's like a 10x essentially from 2022.
A thing that, I don't think there was many people that I was talking to, communicating, or listening to that helped me realize that whenever I have a dislike for a company or I see that they're going in the wrong direction, sometimes it's always good to get that thesis spelled back to you at a time where you can sort of realize that the selling needs to stop. Like even Block, for example, is not going to go under. And there's going to be a place where a re-entry would look nice, or even PayPal for my portfolio. That puts a smirk on your face. You were disagreeing with me there for a second, Roy.
You're talking about the future NVIDIA. Come on, bro.
Yes, exactly.
By the way, I'll do a plug for Tanner. He has a recent interview with Dan Dolev, who's kind of a fintech specialist. Great discussion, very entertaining. There's a lot of takes in there that I don't agree with, but it's very interesting to hear what he says, including some. Well, you can look at the title of it, that PayPal is the next NVIDIA. To Dan Dolev.
Was not. If you click on that video for 3 seconds, you'll realize how fast that was not clickbait. He said that bar for bar.
And he later said, use it as a title for your video. So,
but he stands by it. Like, anyway, going back to it though, I think if Coinbase, which is not a company I want to be a part of right now, does sell off very hard, a big mistake was not buying it in the 30s or 40s or somewhere where I was following the company and just didn't take a look back at what the company potentially could have done whenever Bitcoin went past 100,000.
Yeah, that was one where it looked obvious to me, but I decided to just allocate harder into Palantir, which I did okay. But
yeah, that's fine.
Well, so like related to SoFi, at the time you had all these different crypto companies that were just folding up shop completely. That FTX is of course the big one, but there was a lot, and I mean a lot. And so I was looking at this like, oh man, unless we expect a extremely long crypto winter, and Coinbase had already emerged from, I think at that point 2, as a publicly traded company. Maybe, yeah, I think it was 2, maybe it's 3. But I was like, they're going to survive this, and they're going to emerge to an environment where there's just a lot less competition. It's like hard to see that Coinbase would not do very well. Now, yeah. I went a different direction, but where I'm going with this is for SoFi, especially on their student loan business, we've seen some major players exit. That doesn't mean that they can't be back at a later date, and that fintechs, they're pretty agile, they can pivot. But when we see that really open up, as far as as far as rates being attractive and there being a lot of demand for the product, SoFi is like they're a huge deal in that space now versus where they were before. They were still significant, but not to this scale. So same sort of aspect. We just don't know when exactly that pivot will happen.
You're saying on the student loan side? Student loan side
specifically, yes.
Yeah. I think whenever the loan platform business opens up for that product as well, they'll also be able to run, especially as it opens up.
So with Robinhood and SoFi in a recession, stock and company, which one performs worse?
I mean, come on. Robinhood.
Probably Robinhood.
Yeah.
Probably. Very cyclical. So
that's the strength of SoFi, right? When everything's going so bullish for, let's say, crypto, the companies that have all their chips in that basket look like rocket ships. Even Upstart, even whenever personal loans are doing so well, they will look better as a stock than SoFi. But SoFi in every environment seems to look good, and that's really what I think. By the way, I mean fundamentally. I don't mean falling down to $4. I mean fundamentally. But that company, unlike Coinbase and unlike Upstart, that fundamentally were not looking good during bad times in their business models. SoFi was looking fine.
I think this is also the problem with stocks in general is I feel like every year that passes, it becomes even more cyclical from a large money moving markets perspective, because everything falls at once, everything increases at once, and you can't find the Coinbases at $30 knowing that they're going to go to 300, because during that same time, SoFi's at 4, Palantir's at 7, Hood's at, whatever it was, 7 or 8. And so you're like inundated with all of these massive deals that you can just hit a dart and you'll get at least a 2 or a 3x. And it doesn't feel as though, like, I sort of understand where like these large famous investors are coming from where they just hold cash for several years to try to take advantage of some of these massive dips, because literally everything is so dependent on these massive cycles that are driven by algorithms and institutions, where, like, I remember, there was these keynotes that Peter Lynch gave, and he's like, I spend 5 to 10 minutes a year looking at what the Fed is doing. And I'm like, that's cute. But in today's market, the entire market hyper fixates over that shit. And it just feels as though it just feels really weird because the good companies fall with the bad and they rise all in unison as well. And 2020 was an amazing year. And if you had sold everything in 2020 and bought back in 2022 and sold everything in 2024, like you could just ride these waves up and down because in between, like Meta did a 5x, like let alone the smaller cap companies. So I don't know. It's a weird space to be in. Like I remember I was buying Tesla like under $100 split adjusted. It hadn't split at that time. And then it went up to $400 and I felt super rich. And then it went down to like $200. And then again, it went up now to like almost $500. And now it's back to $200. And it just feels like such a crazy ride to be a part of. But that's the entire market. Like the S&P, what was it, the S&P or the NASDAQ that fell? I think maybe NASDAQ, it fell like 10% or something during like since February 19th until now. And it's been like 3 weeks, and as a whole, every single stock in my portfolio was green today. And majority of my portfolio was high single digit percentages and some were double digit percentages. It's not like any news came out of those names. They just rise and fall in unison. And it sort of takes away some of the luster of actually judging some of those companies that are fundamentally solid versus companies that are fundamentally crap. I can hold them both in my portfolio and both will rise and fall with the wave of the macro.
I think on a day-to-day basis, that's true. But if you look out on companies over 3-year periods, there will be winners and losers. There'll be companies that just, they see more green days than red versus other names. And so, yeah, there is a tide that is, going, but there's also the quote unquote captain or sailors that are doing their best to also take advantage of the waters as well.
Regarding the S&P 500, technical correction on Thursday, that's a 10% downside from the top. For the S&P 500, NASDAQ was actually a few percentage points away from entering bear market territory. I think the Russell actually hit that. The less significant than the S&P 500. That's really what people follow the most. But yeah, it's a lot of movement and a lot of volatility over the last 3 weeks, including today, but thankfully volatility to the upside.
It also feels that it's been exacerbated though. Like the periods from peak to trough are much more compressed. Like COVID was one thing where in a couple of weeks it fell drastically. And then like even now you have these shocks in the system where, I mean, this was the most recent one, but like the yen carry trade, for example, like overnight you saw like a stupid large drop. And it just feels as though like, I don't know, it's such a weird place to be in. It doesn't really faze me that much anymore, but I feel like it's on a razor thin edge of does it go up or does it go down as an entire market. Like, oh my gosh, the S&P lost $2 trillion in the last week. It's like, well, who cares? They're going to gain 2 trillion next week. I'm like, who is moving all these markets in such a drastic, I don't know.
Honestly, do you think that this is like a potential really, really scary thing though? Is like the market, even during bad news, so badly wants the market to go up. And so like, if there is something that actually bad happens, right? Or the United States sees some sort of, really bad balance sheet problems or like a test for its power as being like the dominant currency or something like this. And I'm not saying any of this comes close, but that we see a correction that we haven't seen in a very long time. Like if you look at the overall PE ratios of the overall stock market, they are historically high. Now, they're better companies in the S&P 500 today than there ever have been. But there is this sort of like, there are those times that like Warren Buffett talks about where things are great and things are great and things are great. And then there's periods of decades where nothing ends up happening.
I don't know
about those times that happen
again.
Sorry?
I don't know that we'll ever have one of those again. Maybe, but the decades where nothing happens, that kind of, that's historically accurate, yes, but the rate of change, innovation, the agility of modern companies is nothing. I'm like, it's phenomenal compared to what it was in the past. Like,
well, companies were making more money during that time, but the multiples were decreasing.
Yeah, but multiples aside, like, I'm not really discussing that. Like, over 10 years, it's tough for me to like look and see like, okay, there's going to be a 10-year period of time where nothing happens, that like there's no real meaningful change. It's just kind of flat lost decade. That I don't think is realistic in the modern environment. It hasn't really been ever since the internet, honestly.
It just feels more precarious. Like, to Tanner's point, like, it feels as though it's being artificially propped up. And I don't mean that in like a conspiratorial way. I just mean that, if you have a real global crisis or a real liquidity like crisis, like, immediately you'll go into money printing. Immediately you'll go into, like, look at what happened with COVID, right? Like, for all intents and purposes, that should have been a drawn out recession that should have lasted, better part of a year, like 2008 was, right? 2008 lasted over a year in terms of that drawdown. Immediately,
every sign to be truly fundamentally horrible.
Within a course of weeks, though, you had a K-shaped recovery, and all of this money was funneled in. If you have another global crisis, immediately you'll have the same exact thing. And I just think that is the part that should make investors nervous, because it's going to get propped up for as long as it can. And if something so drastic happens that it can't get propped up again, then you're going to see a real fall, because you're delaying this, natural corrections and natural recessions through monetary policy. And I just feel as though you're like kicking the can a little bit. I don't know.
Do you also think that a lot of the market going up is, one, overall amount of US families are investing, self-directed investing is increasing. Just the amount of money in markets is going up. And then also this, that the time that it takes for information to get through and for people to assess companies, like you listen to the way that Peter Lynch used to get his alpha on companies, is just a like straight up necessity now. If you're not doing that, you're at a severe disadvantage. You're not at an at an advantage just by reading a financial statement, which is essentially, what he was doing. He was calling up these companies and being like, hey, can I have your 10K? And they're like, no one ever asks for this.
So crazy.
But like, do you think that people's access to information is just making markets recover so much faster because they can swallow the risks quicker, I guess?
I don't think so, because I don't think retail drives these moves. And I don't think institutions are the ones who are like selling their entire holdings and buying their entire holdings back a week later. Like, the sharpness of the moves to me points technical patterns more so than it points to fundamental, like, long-term investing reasons.
Even then, I find that some of these institutional money managers, like, I don't know. I think they make a lot of moves and a lot of plays, and they still don't outperform other markets. And there's a reason why Warren Buffett is who he is, because it just seems too freaking simple. And then you see these money managers that are coming out and saying, hey, we can sell everything here or move it here. And half the time they get it right and half the time they get it wrong. And then they get a regular ass average like they were doing before. And I don't know. How smart is smart money, I guess.
Yeah, I think that the main thing is like the agility of companies versus in the past, they would take a long time. Not every company, but a lot of companies would, partly from the speed of information, but would take a long time to actually pivot and change. But a big part of that is really just the way that companies are built. That in the past, almost every company was a hardware company. Like the internet didn't exist. So what are you going to do? But you can do software too, and that is meaningful, but you're still sending out like discs and such. So now companies are able to, if they need to, be proactive with layoffs, with consolidation, with um, taking care of aspects of the business that just are underperforming and going with what works, and then being able to turn on a dime and say, okay, now is the time to really ramp marketing, to really go after growth. And so they tend to be. There's still some waste, but I think there's a lot less, especially after the last bear market, because there's a lot of large cap companies that became a lot more efficient and really led the way. I think that's continued until we get to that where revenue is the only thing that matters and it's growth at all cost mode, which I don't see happening anytime soon. These companies are very, very healthy, even if the multiple is not cheap, especially on some of the larger cap tech stuff. I just have a hard time seeing a 10-year period where nothing happens. Like you're just not going to get that.
Yeah, I guess since the 2000s, right? Which even then, the internet was around and people were dabbling, but it's not like it is today, where you're seeing the high majority of people transition a lot of their life over to digital. That growth stocks and growth has been the focus rather than value stocks, and it is definitely a different environment than all the books that we're talking about, like, The Intelligent Investor or something like this that was written a very long time ago. But not to say that things are different, but being able to deploy product and sell digital product that took $0 to make and has near 100% margin, I mean, that is what, snake oil that actually worked? Like, I don't even know. Like, that's never been invented before, I don't think. Was there a product that we sell before that had that high a margin? Water? Like what?
Not that I know of.
What are you talking about?
I'm just saying the internet brings higher margins, like higher margins than we've ever seen. And before, we've never created anything that didn't need human capital.
That did not need human capital?
Correct.
The internet needs human capital. What are you talking about?
Yeah, but I'm saying you can also deploy things that are automated that require less human capital.
And that trend is accelerating under AI. So
yeah.
You could argue computers also did that.
Yeah, I'm lipping that in.
Digitizing records, and then
I think you think I'm on the opposite side of what you're saying, and we're on the same side.
Okay. They're not. The internet and the computer are not like synonymous, by the way. They're two separate technologies.
Sure. Sure. I mean, we knew about the internet for a real long time, but I'm going to count it as the late 1990s because,
because that's when you were born.
No, but there's not like no companies were doing anything with the internet in the 1970s. Like,
sure.
But yes, when I was born, the internet started in 97. Okay, what else do we want to get into? Two future Americans just arguing with each other while the American watches. Anything else?
I mean, not related to SoFi so much, but Palantir had their AIPCon 6, and it was amazing. It always is, but it's a little late for this. But I remember maybe a year ago, maybe it was a little bit longer than a year ago. We're talking about like AIPCon 2 or 3, something like that. And I'm like, dude, you need to listen to what others are saying about the actual product. If they're not paid, there's no reason to say how amazing it is. Yeah, 17 brand new contracts announced in a period of like less than a week, which is insane. And like, so the craziest thing is like the rhetoric towards Palantir has not changed over the last really 2 years at this point, where companies come in and they're shocked with what Palantir is able to do. There was an interesting interview that Alex Karp didn't quite confirm that Palantir is working with Doge, but sure set up expectations that it would be a little bit of a surprise if it wasn't, or at least wasn't in the picture at some point. It just result after result. So that's one of the cool things about a business to business company is, what consumers say about the product, like, doesn't matter just because they don't have a consumer facing product, but the businesses are just like waxing along. They had over 100 different clients show up. They're not paid to be there. They're invited, they're welcome, that we're demoing all sorts of different Palantir products. And it's just the ridiculous amount of acceleration of this company. Now the stock, yes, it's still very elevated. But a lot of that, there's speculation, but there's a reason why it had so much speculation in it, because it's an absolute unicorn. So just absolutely loved hearing that and seeing that.
Yeah.
Oh, so yeah, the last thing with that, the 17 new clients, like they ranged across a whole bunch of different industries, from like military startups, software companies. Walgreens is one of those that was mentioned. Walgreens has been a client, it looks like, for over a year. They announced it over for AIPCon specifically. And we're not exactly the keynote speaker, but they were the first to present. And you have, Qualcomm's as well, just a lot of different clients, from just very, very small to massive. And it's interesting to see how almost ubiquitous that Palantir is becoming across almost every industry. I think education is probably where they have had the least amount of penetration. They're just a behemoth. I'm not saying, buy it at this price. I'm very impressed with that company. Somebody that has a huge position in Palantir, I'm like, oh man, if this bear market, it's not a bear market, excuse me. If this downside does become a bear market, and it keeps dipping, like, that's the tough thing, is everything dips at a certain point. I've not bought more Palantir meaningfully, other than just a few shares here and there and some cash secured puts, since 2022. So it's like, okay, at what point will I add to my largest position? And so, but I'm kind of curious, like, for you guys, since pretty much everything has been selling off, what have you been allocating to most aggressively over this week, or the last couple of weeks, let's say?
Tevis?
I mean, I got assigned 3,000 shares of SoFi today.
At what strike?
14. Yeah. I got assigned shares of Tesla last week. I'm going to get assigned shares of HIMS next week. So yeah, that's pretty much what I've been adding.
Holding good companies for the long term.
Yeah, or until I get my covered calls taken away. But yeah, pretty much.
Fair enough.
And honestly, this is, if we keep having this up and down, lots of volatility, but it's not really going anywhere too fast. So if we enter a range, like, that's the best time to be an option seller. It is. So, but maybe we'll keep tanking and we'll see. So what about you, Tanner?
The same old NVIDIA, Hood, Google, SoFi. I'm looking into a company that I think, what the heck is going on? It's just absolutely nuts. But
Joby?
What?
Joby,
yeah, Joby. Maybe if they were at the AIPCon, but they weren't. So,
Archer, by the way, announced a contract expansion with Palantir, and I'm like, dude,
that's why I said
that. I'm not a believer in eVTOLs, but if I was, yeah, that would
it would be that one.
Yeah, for me, it's I've probably bought more Robinhood than anything, but PayPal, I bought a lot of PayPal, especially, actually, I almost timed the bottom perfectly with my largest purchase of PayPal, and also bought some NVIDIA too.
You're not on mute, Tanner.
I'm trying to get over to Sorry.
I love how you're losing it way more than I am recently on these comments.
Oh man. Sorry. Like, I have a bunch of mods and they do nothing, dude. All right.
I love how I get nobody really flames on my channel, they just flame on yours. But shall we wrap there? What do you guys think?
hilarious disc, by the way. All right. Yeah, we can wrap. I want to talk in the after hours about NVIDIA. So get ready. Ladies and gentlemen, thank you all so much for watching. Really do appreciate your time. But bye for now.